How's the market San Diego? It's April 2023, so let's jump in with some of the most important local stats. The current combined median home sales price is $825,000. Now that's increased 4 months in a row, which demonstrates home values are continuing to rise. Now we are just about 2.5% below year over year, the value of this time last year. But all those predictions of doom and gloom and double-digit crashes just aren't materializing, and a lot of those critics have gone silent recently. Now, if you're specifically in the market or own a detached home and you're concerned with that, the median home price for a detached home is $940,500. Now that's up $91,000 in just 2 months since January. So again, it's showing that increasing trend of rising home values. Right now, the biggest thing is that pending contracts are outpacing new listings coming to market. So that demand is really outpacing supply, and inventory is incredibly low. It's still at about 1 month. The average in a balanced market is always considered to be between 4 to 6 months. We've always been running quite below that since even pre-COVID time, but we are still around about 1 month of inventory. Now, the current list to sold price ratio is 98.8%. Remember, in April of last year, that got as high as about 107%. It declined pretty steadily for several months in a row, got as low as about 95% around December, and now it's been ticking back up to the point where it's at just under 99% currently. And what that means is almost all buyers out there are paying close to asking price. Now, what's interesting is if you segment out different price segments of the market, what you'll find is that from the median price and below, which would be considered starter homes or entry-level homes, that list to sold price ratio is actually closer to 100%. It's pretty much right at asking price or even more competitive than that. As you move into bigger homes and price points above the 2 million range, the room for negotiation starts to increase. It goes down to about 96% of the list price to sold price ratio. And then as you go into the higher end, which would generally be 5 million plus San Diego, you're going down to about 92% of the list price to sold price ratio. You can't just apply a blanket average to your home if you are a $5 million plus home as opposed to maybe an $800,000 starter or entry level home. And now on to interest rates. Right now, the current interest rate is about 6.39% for a 30-year mortgage. Now, over the course of the past month, that's been bouncing around in the low to mid 6% range. It got as low as about just below 6.2% recently, but it's really finding its footing in that low to mid 6% range, so you can pretty confidently rely on it being right around that. This is very important because day to day these things do change, and if you're working closely with your realtor and a lender, the lenders know what type of reports are coming up. For example, if a jobs report is about to be released, or maybe there's a CPI report coming out, a lot of the times they have sort of a whisper info of how that's going to impact rates. So on a Friday, you might want to lock your rate knowing that there may be a CPI report coming out that doesn't seem like there's been good data around whether it's going to help rates go in the right direction for you. So again, if you're an active buyer, you really need to be in the day-to-day of this and working with your realtor and your lender on a day-to-day basis to know how to get the best deal, the best interest rate, the best pricing. Even small movement in the interest rate can really affect your monthly payment, especially in the price points we're looking at in San Diego. In larger market news, there was California FHFA, a Dream for All Homeowners grant that was issued. They had earmarked $300 million for first-time homebuyers that came in below a certain median income threshold to assist them with down payments. Basically, California had put aside grant money to loan to people for their down payment so that they were almost taking in a share of the ownership. They were funding a loan for a down payment percentage up to 20%, and then there was repayment terms. And also forgiveness terms. Within about a week, the entire $300 million grant was completely drained. So it goes to show how much demand there is, and especially from people who just are trying to get into the market from an entry-level or first-time home buyer perspective. They're going to revisit that grant and see if there's more funds they can allocate to it. But I think that just underscores how much demand there is and how much faith there is in homeownership, because California, if they're going to loan and grant you up to 20% on a home, they're betting on home improvement. They're not going to set aside $300 million if they think the market is failing. So there you have it, a quick update on some key metrics in San Diego that can affect you as either a homeowner or a potential buyer. And please don't forget to subscribe if you find this info helpful, and share it with a friend if you know they might be in the market. I'd love to hear from you.